Good morning and welcome back. It's the market forecast for Monday, June the 7th. My name's John Hoagland. Thanks for trusting me with your time. Hopefully, we're going to find some accurate context, some good risk management areas, and some patience for us today. I hope you had a good weekend. I know that I had a nice weekend. I had the opportunity to spend some time with some of my fellow Top Step co-workers. Had a nice kind of a campground day on Saturday. It was very nice to see all of my family members that I work with at Top Step. If you weren't there, you were certainly missed. Yesterday, June 6th, was D-Day. Hopefully, you remembered to say a prayer for all of those who fell on that day. It was a pivotal day in history yesterday. As far as the markets this morning, really not a lot going on. All of our markets that we look at are opening inside of value, which suits me just fine. I like to be very patient on Mondays. And as far as economic numbers this morning, really nothing to think about. Nothing important, nothing impactful. It's kind of a slow week when it comes to economic numbers. We do have some international trade numbers tomorrow at 7:30 Central. Of course, Wednesday, the EIA petroleum status report at 9:30. Thursday, however, probably the most important day as far as economic numbers this week. The CPI numbers due out at 7:30 Central, as well as jobless claims, EIA natural gas report. There are some announcement as far as some short-term bill announcements and nothing really. And we've got a week from this coming Wednesday. We do have the FOMC meeting. There's lots of things to look at as far as the markets are concerned today. We've got all eyes kind of on the infrastructure bill deal that is in negotiations right now as they come back into the room today. Those negotiations are hopefully going to remain bipartisan. We have to see how that plays out for us. So with nothing else to look at, that's really I think, probably going to be a lot of the focus that investors and traders are going to be looking at today. Inflation numbers continue to be in and on the minds of traders and investors. A lot of folks really looking forward to seeing what those CPI numbers are on Thursday. U.S. equities are set to start sharply steady to mixed. The S&P is really kind of pinned up near the all-time high from a couple of weeks ago. It's going to be an interesting week, as it always is. And again, with the markets opening in value, no real change in the perception of value of these products, it usually gives me a little bit of time to sit back, relax, and look for trade locations, look for better trades as the day goes on. Crude prices continue higher. We are currently at October of 2018 levels. Interesting. As far as the VIX is concerned, it's up a little higher this morning at 1663. The dollar index slightly lower than the close on Friday at 90.11, and a little bit of an uptick in the 10-year yield up at 1.57%. Always have to say good morning to everybody, as always. Brian, Frederico, good to see you. James, Theo, good to see you. My brother Rick, love you, good to see you. Trading Research, Laura, Murph, good. Oh, good weekend last week, better this week, good. Excellent. Love the positivity always, Murph. George Adams, Vici, Richie, JD, good to see you. I missed you this weekend, my good friend. Jorg, good to see you. Tim, Caesar, the chef, Mike Magallanes is in the room. Great, good morning all. Changed screen name, was Greg. Okay, all right. Greg H., good to see you. Thanks for letting us know that you changed your screen name. And Andre, Joe West, good morning to you as well. Tone, good morning. Jason, happy Monday, absolutely. Fanny, good to see you, Fan. Good morning. Prince Zakis, Traders Global, good morning to you as well. Tactic, good morning. Jerry is awake. I am awake too, I hope. We've got some business to take care of this week, today. Here is the link to sign up for group coaching, that is Wednesday at 1:30. Actually 1 o'clock, I should say. And I'm hoping that we're going to have the return of Dr. Menaker for market therapy on Wednesday at 3:15. As the markets are closed, relax. We have a nice chat with the good doctor. Dr. Menaker is a clinical psychologist who is an active trader who has worked with many institutional traders and individual traders as well. We're going to nail down a topic. I'll let you know what that's going to be tomorrow morning and Wednesday morning. Always a pleasure to have the good doctor. It's trading psychology is so important to everybody's success in trading. I don't think that we can give it enough attention. So that's why we're bringing the good doctor back on Wednesday to see what the good doctor has for us. All right. Without further ado, let's take a look at what we've got in these markets. And remember, the markets are really kind of opening in range, in balance, in value. Patience is always going to be a virtue. It seems like Friday we were taking our breath, or was that Thursday taking our breath at the beginning of the market forecast, because there was a lot of motion. There was a lot of flashy things to try and lure us into taking opportunities that may not be the best that we can find for ourselves. So let the market come to you today as usual. All right, so without anything else, let's take a look and see what we're seeing in these charts. As always, this is the daily chart in crude oil. Now, if you remember on Friday, we were really kind of looking at how this market has really just been driving to the upside after off these lows here from about the middle of May. We've really just been one time framing higher, and it's been, a pretty decent move. We've seen some open interest increase along this, and indicating that money is still coming into this. Friday there was no sign of profit taking, maybe a little bit, but we had overlapping. We had a higher low, we had a higher high. Open interest continues to pour in. We added 15,000 in open interest on Friday, so money still coming into the upside here, ladies and gentlemen. One-time framing structure remains. We have a higher high today. We have a higher high, higher low, higher high, higher low, higher high. It just keeps going and going. That was our concern on Friday. We thought maybe we'd see a little bit of profit taking that just did not come in. So starting here on Monday, we've got the market up against last week's high. Our weekly kickoff high is up at 71.20, not all that far away, ladies and gentlemen. It's $1.50 away right now, so kind of tight as far as the weekly kickoff level here. It's a measured move largely, some based on past technical analysis, but if we can get above and accept above last week's high, which was the high on Friday actually, 69.76, then we can see a potential move back to that upside, back to that move to the upside. Taking a look at this trend line along the top here, 1, 2, 3, and relative decent points of contact. It puts us at a potential opportunity right up here, maybe on Tuesday, Wednesday, Thursday, when we get these areas where the trend lines cross weekly kickoff levels. We can see some pretty decent opportunities there. So again, taking a look at the 30-minute chart, what are we seeing so far? I'm going to make this big so everybody can see it. All right, so this is Friday's range and value. Settlement is up here, 69.62. Where are we? We're right at the point of control from Friday. We're right in the middle of value from Friday. That's why I suggest being patient, looking for better trade locations as the day goes on. We've got last week's high, which was rejected from last night. We got a pretty good move to the upside. Buyers just bailed out. Sellers came in, took over, took us to the low of the range from Friday. Sellers bailed out. Buyers came in and brought us right back into value. So I'm really going to try and focus more on overnight low, maybe get a decent opportunity, or perhaps last week's high, which we saw some rejection above last night could be a decent opportunity. But in the middle here, I don't want to really be involved. It's just a random short time frame traders picking each other's pockets, and I want to just try and stay very patient. Michael H. The whole moving averages I'm using on both the 30-minute and the daily chart. This is a 20 session exponential. This is a 50 session exponential moving average. This red line here is a 9 session whole moving average, and the blue one is a 13 session whole moving average. I look at them, in different ways as to where momentum might be falling off or increasing in a specific time frame, in a specific time, the time frame I guess we would be at. So, as far as crude is concerned, the whole moving averages are basically saying with the 9 below the 13, looking for opportunities to sell strength would be advisable. But again, this is a very short time frame level to look at. The fact that it's in range and in value tells me be patient. Don't get rooked into something too early. You might make money on it. Then again, you might not. All right, 30 minutes. Here's the daily. We got stuck in a little bit of a range here. We did get out of that range on Friday. We put in a new weekly high at that time. We didn't really bring in a whole lot of volume at that time, but we did add 15,000 in open interest. Open interest continues to pour in. We are seeing one-time framing structure. Well, excuse me. Hang on one second. So I'm going to be introducing something to all of you right now that you may or may not be aware of. It's cumulative delta. Delta is something that I look at really on a regular trading hour session basis. For the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days, the delta has been increasing in negativity. In other words, a lot more aggressive traders have been the sellers. They've been hitting bids, but they've been unable to push price lower. This can be an indication of longer time frame buyers, which on a Friday, after short time frame sellers trying to move the market lower, it would make sense that we'd get this pop on a Friday when all of the shorter time frame traders want to be short for the weekend. So it put in a new weekly high. Here's our all-time high that was also, by the way, in the overnight session. Markets don't like that. So we've got a little bit of a breakout to the upside. We found some support in the overnight at the top of this area of balance. We seem to be continuing to push up against our weekly high from last week, which was on Friday, as well as a potential move to the upside to take out the all-time high, which again was in the overnight session. The market doesn't like to leave those in the overnight session. Don't forget that the equities, S&Ps, NASDAQ, and the currencies are in rollover. We're going to roll into the next month, which will be the September month, on Thursday night into Friday with greater probability. Okay, so we have to remember that a lot of the longer time frame traders who may have been actually accumulating longs or getting out of shorts that have kept the I would have to say it's more longs because we still have open interest coming into the market. It continues to climb. Longer time frame buyers have been in this market. Now they're going to have to roll all these products into the future month. So it's going to be an interesting rollover. Let's take a look at the 30-minute and see where we are. We are in value. We are in range. We are right at settlement. We are right at point of control. Here's Friday's move to the upside. Here's last night. Well, settlement is here, 42.28.25. Put that on your charts. Here's last week's high. Here's our high for this week. And last week's high is actually here. So we just took a look above it. We just took another look above it. But where are we? We're in range and we're in value. So again, this tells me Try and stay patient. Weekly kickoff high 42.38 just above. This is kind of a target rich area up here. We've got value high from Friday. We've got the high from Friday. We've got the weekly high from Friday. We've got our weekly high so far right here. So here we go. Target rich environment up here. It gives you the opportunity to limit risk. You know, we just had an opportunity to look at high of value, high of the day from yesterday, and the high of the week from last week. This was an opportunity for us. I know that the market's not open and I'm not in it, but this is what we're talking about. We want to look for opportunities that offer the chance for us to limit our risk on this. This could be a very cheap trade if it does offer itself again. It would be contrary to the bigger picture, but if you can keep it cheap, you may find yourself in a pretty decent position. At least good trade location for the overnight session. Overnight high, overnight low, value high, value low, point of control, settlement price. There's opportunity here, folks. We are going to have to try and be patient for it. Wait for it. Make the market come to you. Place an order where your dream trade location is today, and then see if you can get it. NASDAQ lost 3,200 in open interest. No, 1,300 in open interest on a big up move. Lower volume, that's to be expected. But I would be looking for open interest to increase in this. A whole bunch of folks probably got too short in the hole here, brought us back to the weekly high. So still wrestling inside of balance. I don't think that we've seen our breakout balance like we did in the S&Ps. I think we're going to have to take out weekly kickoff high, which is 13,796. Last week's high weekly kickoff level are going to be somewhat pivotal for us today. They're very close together. You can see this pink line. That's last week's high. Weekly kickoff level just above that. Kind of a target-rich environment. Open interest lost 1,300. Is that moot and we're still in this range? It indicates that there's not necessarily buyers coming into the market in the same way that they are in the S&Ps. However, we are seeing some delta divergence. The delta continues to get more and more negative as we hang here, and we're unable to maintain price at lower levels. So another indication of possible longer time frame buyers in the NASDAQ as well. It makes sense. But again, our target-rich environment is certainly above. Looking at the 30-minute chart, okay, where are we? Here's that target-rich environment. Last week's high, weekly kickoff high. The market really just a few minutes ago trading at settlement at the point of control, inside value. The market kind of coming off of that already, but there's no overnight inventory with which to look for opportunities. If we were still down here and I was thinking the overnight was too short, I'd look for a move back to settlement. Well, that's already happened. So again, I'm going to suggest trying to stay patient in this market. Gold. Also, inside value this morning. We'll see how things have been playing out. So the upside digestion state, we had some pretty decent activity to the upside. We've kind of fallen at Friday's low, and the recovery off that low kind of states that this market is now going to perhaps digest this area for a while. I think we're in for a little bit of range-bound trade here in gold until proven wrong. Our weekly high and weekly low and weekly kickoff low could be indicative of a potential change in that. We had no real change in open interest. We added 200 in open interest off this low on Friday. No real big deal there. So I'm believing that we are going to be falling into short time frame control, which means short time frame levels may have a higher probability of being respected, but there are a lot of them. So let's take a look. All right, so here we are. I'm going to make this big because initially the opening range was the low of the high of the session. There it is, right there, that little red line. I believe it was 1889.20. Initially, the market broke lower, but now we've taken out the opening range. So kind of an indication that opening ranges inside of value may or may not. I mean, that's always the case, but they may be a little bit less reliable. I was very patient this morning. I didn't want to do anything. I didn't see that we had much of an overnight inventory to work with. The overnight inventory has just brought price back to settlement, which says, all right, let's stay patient and see what we've got here. So again, in range, in value, next, right by point of control, right by the settlement price. It's just not a high target environment here. Now, if we go out a little bit, what do we have to look for? Well, we've opened in range in a kind of a repair situation. We've got a point of control up here, which is 1907. We've got a point of control down here, which is 1870, 270. All of these are going to be targets for the price to kind of reach to. It depends on which one traders are focusing on. If they're focusing on the one down here at the low from Friday's range, that's where we'll head. If they're focusing on this one up here, that's where we'll go. But we don't really have any good indication or good trade location in the daytime frame yet to make those kind of choices. So again, I mean, we're right in range, right in value. I don't see any reason why anybody should be really aggressive in getting into anything. If there's some sort of headline news that comes out that changes things quickly, respond if you can, but I'm going to try and stay real patient today, being Monday, and with all of our markets opening right inside of value. Look at this. This is the euro. This is the 30-minute chart, but the market barely moved away from settlement last night. It's almost magnetic. And now here we are right in the middle of value. Take a look at the daily on this. Okay. Now, remember, this one rolls on Thursday to Friday as well. The currencies are also in rollover. The Friday rejection of the low here starts to kind of create digestion. It's very similar to gold. But the open interest, we lost 2,600. So we started to get a little bit ahead of ourselves to the downside after breaking the upside structure here on, I think this was Thursday. Yes, Thursday, Friday, a little too short, losing 2,600 in open interest on a reversal day like that. That's just a whole bunch of shorts trying to get out. Short time frame traders likely are in control again here. Very similar to the gold. Just no real overnight inventory with which to look for. Our weekly low was Friday. Our weekly high is up here. We've got lots of targets and things to look for as far as opportunities are concerned. So try and stay patient. If the market is in value, it can go either way with just the same amount of probability. It's when it gets away from value and maybe approaches some of your more important short-time inflection levels, like the low on Friday or the weekly low last week. How about this naked point of control up here at 122.16? How about value high or our weekly kickoff high? Also another naked point of control up there. So while we're sitting here in value, the market is digesting and trying to figure out what direction it's going to go. When it finds a direction, you can either go with it or wait for it to give some sort of structure to come back to value. Value is right in the middle of everything here. So, and here's for the 10-year. All right, well, we're still holding decent upside structure. Slow, but decent. Higher lows, higher highs, up against last week's high. We got a little bit of an uptick in rates. Maybe my brother's talking about Janet Yellen says higher interest rates would be good, a good plus for the U.S. I'm not sure that's going to be a great thing. Richie says for the banks, maybe. Yes, right? So we get a little bit of an uptick. It seems the market has kind of fallen off of Friday's high. Last week's high, we lost 38,000 in open interest on this push to the upside. So I think we still see traders trying to get a move to the downside, ending up short and getting squeezed out, which is, I believe, what happened on Friday. I mean, it was a pretty stiff move. Where did it start? Low of value, approximately on Friday. Low of Thursday's value is where that started. Even if we waited and we saw that there was some momentum to the upside, even if we broke did a break out of the previous day's range, there was some opportunity there. But today, settlement up here 132.06.5 ticks, right in the middle of value. Do we have some overnight shorts here? Maybe. Do I feel like it's worth the risk? Not necessarily. I'm going to be looking for more important inflection levels. We've got a couple very close. Last week's high, value high from Friday, point of control from Friday, and settlement, all very tightly packed here. To me, that's a target-rich environment. All right, so it is only Monday. We've got 5 full weeks, 5 full days with which to operate this week. So stay patient. Markets opening relatively close or in value. Stay patient. Look for the markets to offer you opportunities outside of value. And I think you'll find you may have a better situation by the end of the day. As always, appreciate everybody coming today, and looking forward to another interesting week. Not a lot of economic data due out. Thursday promises to be probably the most powerful or impactful in economic information due out. But we've got opportunities this week. Let's take our time. Let's be patient. Let's take our deep breath. Humble, grateful, and creative in your trading today. Get out there and profit. We should see Dan for the market recap today. It will be good to see Dan again. And I'll see you again tomorrow morning for the market forecast. Sign up for the group coaching and for market therapy with the good doctor on Wednesday. We're looking forward to seeing you there. Trade well, get out there, profit. We'll see you later.